Hey traders, welcome to Charts and Coffee. Hope everyone is doing great. Yes, the markets are closed. Well, the stock market is closed today, but you can see here the futures markets are quite open. Very illiquid, of course, because today is a bank holiday. But I thought, you know what, we haven't done a holiday edition of Charts and Coffee in a long time, and I'm here in the office looking at the charts, preparing for the week. Got a webinar coming up this Thursday, getting ready for that so I can absolutely brain dump some awesome things with you all on Thursday at 8 Eastern. So super stoked about that. All right, so then what else do we have going on? Well, let's look at Monday as a bit of a jump start to what we would be seeing, probably the echo of going into Tuesday, which is really the start of our shortened week. Very interesting to see that Sunday, Monday, obviously, again, very low volume, low participation. But remember, this bank holiday is a U.S. bank holiday, so we're still getting opinion from other parts of the world. And we can see that we're holding on the daily time frame on the S&P. So not making significantly lower lows. We're just below Friday's close. That wick that was left behind on Friday, when you see a wick like this, it almost looks like a balloon, no? Got this candle body, and then you got this little wick hanging down there. I'm sure there's some fancy Japanese candlestick name, not anything that I'm, particularly concerned about in terms of the wording, right? Jargon doesn't get us anywhere, and neither does dogma for that matter. I'm not going to presume that means it's absolutely a bullish candle, but there is a bullish nature to how we went to a low. It triggered interest. It triggered buying interest, and we snapped back up. I'd like to see follow through in that today and possibly even into tomorrow. I'm going to show you some levels here as we go through that have my attention as to why that wick is so interesting. Since we're on the Dow here, let's take a look at it here really quickly. Since we're on the Dow, take a peek at the way in which we made a low back on the 10th of, right there, 10th of February. We've made a low back on the 7th of February, 9th of February, and on the 17th, pretty much in that same area, right? Pretty much in that same area. One of my favorite things to do is have two types of support on a chart. Right now, I'm showing you the DPMR. One of the things that's really cool to layer in with the DPMR, which is a volatility-based support zone, is the Darvis 2.0. Use a price pattern-based level to show where the support could be. And that's what you can see here on the Dow. What about the S&P? Is this an isolated thing? Absolutely not. Take a look at the low in the 10th. Take a look at the low in the 17th. And if you throw, let me just show you what that would look like. Let me throw that Darvis on there and show you what that looks like. Let's zoom in a bit, and there it is. Do you see how the Darvis kicks in there? And so you got a DPMR plus Darvis. Now we have a price-based zone. Now we have a volatility-based zone. There's your 10th. There's your 17th, right? So there it is, automated. I'm not drawing that in manually, gang. You'll notice that everything we're doing, and we're going to talk a lot more about it on Thursday, is automated. What can I automate in order to make these levels pop out without having years of finding this pattern, without having the bias that sometimes we might have from listening to whatever is out there on the interwebs or television, and just see things for what they are. Trade what we see, not what we hope, not what we think. So NAS is doing the same thing. Thank you, Darvis. By the way, structure, gang, is bullish. Structure is quite bullish. So, by the way, I know there's fewer of us today, but if you have any questions, if you have a symbol that you'd like to take a look at, gang, don't be shy. If you've typed in symbols before and I didn't get a chance to get to the question before our 20-minute show is up, today's a great opportunity. Fire away. Type in those symbols you want to take a look at, and we'll jump into them. All right, so we've covered the indices. What about yields? What's going on with yields? If I take a look at what's going on with yields here, yields are still neutral, by the way. What do I mean by that? the bond, the long bond, whether you're looking at ZB, whether you're looking at TLT, this is still a wide, choppy range. How do I know that? Multi-trend, gang. Everything that we're ever going to use, DPMRs, HPMRs, Darvis, you name it, everything starts with what's the structure. Take a look at this previous Darvis down there. Gang, look at that. This was the low that we put in on the 30th of December. Boom, there we go. 17th of February. Call it a double bottom. Call it a man walking a dog. I don't care what you call it. What do we want to notice? Where do we go in terms of price? That's what the Darvis is looking for. Yes? And then what's the slow stochastic doing? Take a look at that. Oversold slow stochastic. How great is that? Signal, here we are having another signal. Do I follow it blindly? Of course not, but we know it's time to be bullish in that area. If bonds could bounce, and we just looked at the indices at support levels, now you see how structure dictates strategy, and these automated tools just do all the heavy lifting. So I love the way ZB is looking, but I know some of you might be saying, but Rag, what about the US dollar? What's going on there? All right, once again, what do we have going on? Neutral market, oversold, still above the 200. Here's a Darvis level here. Here's another Darvis level here. We have a zone right here, basically a zone between 106.91 and what looks to be, 106.43. That area is going to be very interesting for the euro to possibly be oversold, which, by the way, gang, why do we care? Why do we care the euro is oversold? What I want these automated tools on there, because that means potentially the US dollar is overbought. So I hope that makes sense, right? I hope that makes sense. This gives us a great lay of the land. This gives us a really good idea of yields, dollar strength or weakness, and how the indices are operating in that environment. And again, gang, we're trying to automate as much as we can. So we ditch the bias, we ditch drawing the things we want to see in arbitrary, very subjective chart patterns, which, by the way, gang, when you systematize something, when you have to code it, this is what I love about having ventured more and more into coding. I'm not a great coder. I'll own that. I know enough to get into trouble. I have great coders who can clean up my mess. Shout out to the Lorna bot. When you have to go through the process of coding something, and I don't mean curve fitting it. You see a lot of that out there. You know, every 74 days there's a brand new setting or some nonsense like that. What I mean is when you said, hey, this has worked for decades, and it's really working right now because it's all those timeless things that are allowing us to understand what's happening in 2023. When you code something, you have to put it into the code what the criteria is. Can't keep changing your mind. It keeps me on track, right? And that's what I think it's going to do for a lot of you. I love the fact that when you have something coded, it's objective and it does the same thing every time. Yeah. All right. So let's get to the question, shall we? All right. First up, Prince, good morning. All right. Is there a website that I like which displays all the sectors in the indices and which overlap? Which overlap? Well, the overlap part, let's say, I like ETFDB. So the question is, where would I find the sectors that are heavily weighted? I just realized my mic's in the shot. There we go. Where would I get a view of what's happening with the weighting of the sectors? Right. So with that, I would say ETFDB. I think that stands for database, ETFDB, and then pull up DIASPYQQQ. And then you can look, I believe it's under charting. You know what? Let me just double check here. I don't have this up on the screen, but I believe it's under charting. And then you can see which heavily weighted sectors are in the indices. And then when you look at the DIASPYQQQ, write down the top 3, write down the top 5. And then when you compare them from index to index, you're going to see where the overlap is. But I can tell you the main overlap between all 3 is the XLK, which is tech. The main overlap between the S&P and the NASDAQ is also XLK. And then the main overlap between the Dow and the S&P is XLF, financials, and XLV, healthcare. So there you go. Saved you a few minutes. All right. Next up, good morning, Mark. Thoughts on XLRE? All right, so pullback on green structure, 40 June calls sound okay. Well, let's take a look. This might be a little tricky. Mark, I would say if you have some time, and it's Monday and it's a holiday, if you have some time, I would jump on over to the multi-chart. So if we were in my sector secrets room, what would I do? I would do this. I'd jump on over to the XLRE multi, and then I would look to see if there's any green, better green in this corner of the market. I would check to see what the liquidity is. One of the things that we always want to be aware of is what kind of liquidity do we have in a particular option chain. So I would check the XLRE liquidity, and then maybe find a better structure that's green, well, DLR, VICI, and maybe find something that's above the 200, PLD, SPG. If you're going to go neutral, maybe find something that's neutral, O, right? See if there's any liquidity in O. Find something above the 200. So I can't get to the setup yet because remember, 80% of our time spent in any endeavor for trading and investing for that matter is watch list building. 20% of the time, that very small percentage of the time, is after the watch list building. Structure dictates strategy. It's automated, so it does take a very small amount of time. But the part of trading that's still very much process driven and human done, right? Not allowing, Chat GPT to find your watch list. Although who knows? Maybe I'll see how that goes. I'll have to figure that out. Um, Rather than doing that, the part of trading that's still very manual, that needs a human, a sentient creature, is watch list building. And when you get the watch list building part right, you'll realize that's where you spend the most time. So that's my answer, Mark. I've got to go back to that watch list building part before I can say that XLRE, possibly below the 200 propulsion, not even lit up, might not be the way I want to go, right? That's the discernment that we can have. And then we say, all right, automated tools, now what you got? Where are the levels I need to find? So we tell it what to do. And that's where I would still say, meh, I might do a little bit more digging, Mark, a little bit more research. All right, next up, Gino, Natty Gas. Sure. This one's a really, really popular one. Trish did a fantastic write-up on seasonal implications as we are in February. She gave everyone a good month heads up so we could think about it. And I think that thinking about it has become a little bit of a, all right, what do we do with it? Gang, if you're thinking as a near-term trade, nothing yet. If you've got a certain risk tolerance, it's a little bit higher, and you don't mind waiting and buying a further out contract, I would say, you could look at some setups. We've done a little bit of that in the sector room with very limited risk, because the UNG would be the way I would recommend. So Gino, sort of back to the watch list part of this, which is, what can I buy that even if we get these crazy gaps in this overall downtrend, can I manage risk, right? So it's very aggro. And one of the things I keep kind of reiterating is I do want to be a buyer, but I've got to wait for at least a neutral momentum, if not ideally a neutral trend. You might say, Rag, how do we do that? That's multi-trend, gang. And if you're really curious about the multi-trend, check out the webinar on Thursday, because it's not just going to be about those volatility levels of DPMR. It's going to be about the time frame that I'm focusing on for 2023, because it's doing the best job of putting us in setups that have these repeating patterns. But we're going to also talk about how, I don't care what the indicator is, mine or anybody else's, everything starts with the structure. And then we can get to fine tuning, like which is the time frame that's working, which zones are really giving us predictable, high probability levels, triggers to get in from and get out, for that matter. So right now, UNG doesn't have those, but if you're thinking about longer term, I think UNG calls with a further dated out expiration could be something where we can manage risk and deal with the ups and downs of a market that's going into a seasonal support zone, but is still technically in a downtrend. All right, so thanks for the question, Gino. Next up is, can we take a look at T and Tropic? Sure. Taking a look at T here, sitting on the 200. I like that. Stocks under 20 can be a little tricky. with something like this, I would definitely want a little bit more confirmation from volume. So this would take me to the V score, and I would say, all right, V score, all right, volume, tell me what you got. Are we sitting at any kind of reasonable support or resistance level? Because under 20, especially under 10, we want not just price and price patterns, but we really need some help from volume. And T is looking kind of interesting in terms of volume. Sitting on the 21, which is probably not as pertinent. Oh, that's the weekly, sorry. Let's just go to the daily. Let me make sure. Yeah, sitting on the 200, which is actually excellent support. We've done this back in late January, sitting just below 20, which is why I'll recommend some volume. We probably need to get above the mean to really see some follow through. But where we are right now is probably some decent support, right around the mean, the average of the volume anchored volume weighted average price. So I do like it as a buy, especially if it can cling to, especially above that 200 propulsion. All right, next up, Anna asks, gold? Sure. Take a look at gold. I do want to be bullish in gold, but gang, I got to be straight up. We are at levels of support. We've been at this V score low before, that was back in early January, which is cool. We're still above the 200, which is bullish. However, the more we are not certain about how hawkish ultimately the Federal Reserve is going to be, that means that there's still confusion about rates. If there's confusion about rates, and on top of that, we might have some uncertainty about inflation, that means the real interest rate, also known as real yields, will be affected. Real yields affect gold, the nominal yield of a bond minus the rate of inflation. I like gold for the long, but gold has been incredibly unpredictable. So I've been leaving gold alone. And I'll take it at a timeout probably pretty soon. The more we start to see a nice evening out, a nice steadiness in the Fed fund futures. In the meanwhile, if I'm not certain about what I want to do with gold, whether that be GDX, GDXJ, NUGT, XME, SLX, any of those metals where there's some overlap with companies and miners, I'm probably going to sit on the sidelines for a little bit longer on this one. But I do want to be a buyer. I just want better clarity on the narrative. All right, next up, would I mind looking at Netflix? Not at all. Let's take a peek. And by the way, gang, if you haven't already, check out simplertrading.com/auto. So much of what we do in Charts and Coffee is a look at what I'm doing in the rooms, like the Sector Secrets room. And some of this stuff is even new to them, although I've been showing them this for the last month or so, but we'll be, sharing broadly which time frames we're focusing on, how we're dealing with those time frames, and using not things that everyone's typically looking at, price and price-based tools. And if you don't know what that means, check out the webinar, because part of why a lot of traders struggle is they're only on one factor of the market. They're not even aware of the market being a four-factor world we live in: price, time, volatility, volume. And when you start putting things like volatility, which are actually kind of difficult to measure, to your advantage, you're just going to see levels other people won't. So that's something I would say, if nothing else, at least educate yourself on, oh, there's four factors and volatility is one of them. If it resonates with you, awesome. But at least make yourself aware of there is an edge in volatility. And, gosh, we could use an edge in markets nowadays. That's for sure. All right, let's take a look at Netflix here. All right, let's see what we have in Netflix. Let's take this chart out of the way. All right, Netflix. So you'll see I do have the volatility tool running here. The last time we bounced into it, Tim, we bounced up a little bit. I'd prefer to see something set up either in that zone on the daily or on the hourly. And I would be cautious of being bullish, because the daily says, hey, at some point we will be oversold. We're not oversold yet. And we're not even near being oversold. In fact, we're not even at the halfway point. The hourly is saying, hey, we're in a downtrend. So when you get a little sneak peek of what I'm doing here in 2023, the hourly is saying, hold on, tap the brakes. And the daily is not quite at the zone. The real trick to trading, gang, frankly, isn't secret squiggles and super, special strategies. It's patience. It's easier to be patient when we have the zones in front of us, right? So my brain can say, maybe I can buy, but not yet, right? How far are we from that space place that I can do something, right? So when I can see it on the chart, people ask me all the time, Rog, yeah, how are you so patient? Because everything that I need to react to is already on the chart. So it's not this unknown. It's not this unidentified zone on the chart. I'm just waiting for the market, the pitcher, to throw a ball over the plate where I know I can make contact. I know the pitcher's going to throw the ball. I just don't know what it's going to be. So my job is to make sure I only swing at those pitches that I know I have a high probability of connecting with. That's what we're doing here. So I don't have that yet, Tim. I would be a little cautious here, especially with the 1 hour. But if we can get down to levels of support, whether that be DPMR or Darvis or even better, a combination, yeah, the better off we'll be. And you can still see I'm still a good ways off from 336 to 333. That's about as soon as I might even think about it, Tim. So now I know the zone. Now I can be patient and I will. And you've probably heard this before. Everyone, let the market come to you. What does that mean? That means I've pre-identified a zone on the chart that is high probability for me, right? And I'll wait for it to get there. And I know waiting is tough, but it's really not when you already know where you're going to do something, right? It's so much easier to be patient when it's not this big, unknown that's facing you. You actually can see. You can wait for price to get there. All right. So, yep, the dedicated are here today, Frank. I love it. Did I do an outlook on the dollar yet? JJ, yes. Euro is arguably oversold. And I do see then the dollar is being overbought. We're waiting for our trigger, but we're at that zone where euro is looking increasingly oversold. Bonds yields are looking increasingly toppy. So we're in a good spot to start getting bearish on the US dollar. And that would mean more excessively bullish on euro. That means 6E futures. That means the micro futures or UUP puts, which I'm a fan of if you want to start looking bearishly on the US dollar. Daniel asks, will my charts work with stocks on toss? Oh, absolutely. I'm glad you asked because on Thursday, Daniel, and if y'all have not registered yet, look, if you cannot attend live, although I really would recommend it, one of the things that Trish and I do here in Florida HQ is we get to as many questions as we can. I love the live interaction. We can talk about things that are happening now, as well as, what I've been working on these past 10 and a half months to fine tune something that has been working for 10 years. And it has to be working, Daniel, on everything. So as much as I'm very comfortable going through the ES, we can do the same thing on the SPY. We can do the same thing, on the SPX. So absolutely, we cannot have indicators that only work on certain markets, right? Because then that's not really robust and that's not really universal. And one of the things that we do here in the office is, hey, does this work on everything? And does this work well? Now, I will say, Daniel, everything does have one criteria. It's got to be liquid. No illiquid meme stocks where shenanigans are likely to happen, right? So if there's liquidity, we're good, right? And that's what we look for. That's what we look for. All right, gang. And just like that shows up. Sorry, I ran over a little bit. By the way, I did not do Raghee report yesterday. Figured today's kind of a day off. I won't mess with everyone's long weekend. But tonight, I'm going to come back with Raghee report later on. And I think we're going to do that around 5 p.m. So if you're free later on, or you can catch it on replay, come join me 5 p.m. right back here at the YouTube channel, whether that be my YouTube channel, Raghee Horner, or whether that be the Simpler Trading YouTube channel. We'll come on back and prepare and see whatever questions y'all might have for the Raghee report later today. If you haven't already, if you want to know how to automatically, and gang, I don't mean mindlessly. Automated means process-driven, timeless, and tested. Yes? So how do I find these zones? Okay, there's no way that I could sit through Raghee report and charts and coffee and break down all these symbols with confidence unless I was using tested and timeless tools on these charts. There's no way, right? So automation isn't in your thinking, automation is in the process, right? What do the charts tell us in a way that we can ditch the bias and ditch the subjectivity and not need to be doing this for 30 years and go, oh, I see the levels. So I hope that makes sense and I hope that resonates. I know it's working. So I'll see you all for Raghee report later on this evening, and then I'll see you all Thursday. But we'll be back tomorrow as well. 9 a.m. right here. Be good to each other, gang. Enjoy the rest of your long weekend. Thanks as always for joining.